Hey guys, here's a quick update. Wealthfront has screwed us. What does that mean? Recently, Wealthfront increased their interest rate for their savings account for good people like you and I. They increased it up to 2.57%, which means for every $100, you would get $2.57 in interest. That was a reaction to Ally Bank. Ally Bank actually reduced their interest rate about a month or so ago from 2.2 down to 2.1. Also, Marcus by Goldman Sachs reduced their interest rate. A lot of banks reduced their interest rate over the last month. Wealthfront, very, very sneaky of them, they raised their interest rate at that same time to bring in a brand new category of client like us, right? We saw the interest rates go up. We said, hey, that's a good move for us. Let's jump our money over to Wealthfront. So those people who move their money over the Wealthfront for their very appealing 2.57% interest rate, they move their money over, which is kind of a pain in the butt. You got to get it set up. You got to, authorize the accounts and confirm and do that whole thing. It takes like an hour or so, but you get it done. So what does Wealthfront do for that loyalty for people who move their money? They wait a few weeks, 2-3 weeks, and then bang, they just reduced their interest rate from 2.57 down to 2.32. That's a pretty big reduction, right? That's a very big reduction for individuals who did move their money over. Now, what makes me uncomfortable is companies like Wealthfront right now, companies like Ally, a lot of these banking institutions, what they're doing, they're screwing with us, they're screwing with our money, they're screwing with our trust, they're screwing with our loyalty. And that's very bothersome for me. I don't like that. What I like to do is find banks or institutions that are pretty static, they're pretty stable. I know what to expect. I don't have to worry about these little teaser rates that lure me in and then bang, they push me out. Now you remember a week or so ago, a little over a week or so, I put out a video on the highest yielding interest rate accounts, one of which was Capital One 360. They have a 2.00 money market account. I like that account because it's very stable, it's tried and true, it hasn't changed in God knows how long, and I know exactly what I'm going to be getting without my money going up and down. I did have Wealthfront on there as an honorable mention because Wealthfront had one of the highest yielding online banking interest rates at that time, but my personal favorite was Kearney Bank. Remember, Kearney Bank offers a 3% interest rate on their personal checking account with a cap at $25,000, which means if you have $25,000 or less to invest, you can go to Kearney Bank and get that 3%. Now, if you're married, you can then put another 25 grand into your spouse's account and you could be looking at $50,000. So those are some pretty good options, but Wealthfront, shame on you. What a terrible, devious move that is not atypical of the banking institutions, because what you did was very typical of all the other banking institutions. You lured people in with a slightly higher interest rate. People did move their money. They got over to you. And what did you do? You immediately pulled the carpet out from under them and dropped it in less than a month's time. Shame on you guys over at Wealthfront. Now they went from 2.57 down to 2.32. Tisk, tisk, tick. So what do I suggest? Of course, I suggest having a wide variety. This is what I said in my last video. You want to diversify even your savings accounts. I don't want to put all my money in savings accounts, even if that has a higher yielding interest rate or the higher at that time, rabbit ears, interest rate at that time. I like a wide variety, diversification of where my liquid savings is being held. You can use the big brand banks like the JP Chase Morgan, like the Bank of America, like the Wells Fargo. You can use kind of these smaller regional banks like the Kearney Bank. I'm a big fan of what they provide over at Kearney Bank, though it is a smaller regional bank. You can go online to kearneybank.com and you can contact them about putting your own money into a Kearney Bank high-yielding 3% personal checking account. Also, the Capital One 360 money market account I have found to be very safe, very secure, very easy to deal with, although it's at 2% interest, slightly lower than even Ally or Wealthfront or Marcus is offering at this point. I don't see the massive fluctuation in interest rates, and I like knowing that stability is there. Remember, this is liquid money. My longer term investing money, I suggest you start looking into different ETFs, different index funds. Like Vanguard has a great portfolio of index funds. Fidelity has a good portfolio. I am more of a Vanguard fan, but again, I'm not a financial professional. Talk to your accountant, talk to your certified financial planner to see if any of this information is right for you. I'm just a dude on the internet giving best practices from my personal experience and what I've noticed. So this is all just my opinion, right? But go out there and do your research, do your due diligence. Make sure at the very least that your accounts are beating inflation. And that's what really I look to do. I want to beat inflation. Right now, inflation is below 2%. Let's say it's around 1.5% or so. There's mild fluctuations depending on who you look towards, but it's below 2%. So 2% is my floor. Having that 2% at Capital One 360 money market, I absolutely love. I do have some money sprinkled over in Ally, some sprinkled over in at Wealthfront, though I'm angry at Wealthfront right now. How dare they do that? Kearney Bank is a great option also. Like I said in my previous video, I do like the big banks, what they offer from a digital perspective, also a security perspective. Over like a JP Morgan Chase, it's great for travel when you travel as much as I do. It's nice to have one of those big brand bank debit cards sitting in my wallet. And that's something you should pay attention to. Longer term investment strategies, 3-5 years or more, you want to be looking, in my opinion, more towards index funds. S&P 500 index funds are great. Right now might be a good time to look into some of the Vanguard bond funds. As we're looking at shaky economies, possible recession, you might want to consider that. I'll do a video about that later on. But I did want to let you know that Wealthfront has just dropped their interest rate from 2.57 down to 2.32. I just noticed that today. I think they did that today. Again, shame on you, Wealthfront. That's tricky business right there. People just jump their money over. They're not even there for a month. You could have waited a quarter, at least. Give them a quarter for the money to sit there and soak. You couldn't even do that. You dropped the interest rate. But that's the way it goes in the banking industry. I am certainly not surprised. I did want to make sure that you guys are informed. Feel free to give this video a thumbs up. Bang, 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 bang. So I know you're there and I know you care. Leave any comments below and I'm happy to answer them. Until next time, boom.
Join the revolution. Get your Dolce Diet hashtag I Eat Carbs t-shirt at DolceDietShop.com. Free shipping, domestic United States. Again, hashtag I Eat Carbs t-shirt only at DolceDietShop.com.